Malaysia supplies 60% of the latex glove, making it the world's largest manufacturer and exporter of latex glove. Given Malaysia's dominance as a global rubber glove producer, we study how the depreciating ringgit and the declining of commodity prices may impact this subsector. Our presentation comprises of 4 parts: industry overview, impact of the weakening ringgit, impact of declining commodity prices, and the future outlook.
There are 4 major players: Top Glove, Latex, Kosan, and Supermax. Top Gloves is the largest producer, owning up to 25% of the global market share and have production lines at Thailand and China. Latex Holdings Berhad is the leading producer of the world's lightweight nitrile gloves and is advantageous to capitalize on the surging demand of the nitrile gloves. Kosan Rubber Industry Berhad has strong reputation in high quality of latex glove production, which also excels in producing other rubber products such as extruded rubber and bearing pads. Supermax Corporation Berhad, as an own brand manufacturer, produces up to 16 billion pieces of gloves per year, meeting approximately 11% of the world demand for latex examination gloves. The latex glove sector has been performing well these years, and the competitive dynamics are likely to remain unchanged. First, the threat of new entrants is weak. This is because of high capex requirements for startup and also to catch up with the existing players' latest production technology, which the players are constantly expanding their production lines. Secondly, the customers are in the form of a few big multinational healthcare corporates. Hence, the threat of customers' bargaining power is high. Third, there are only a few materials suppliers and they specialize in different products. Hence, the rubber gloves manufacturers' switching cost is high. This in turn means that the threat of suppliers' bargaining power is also high. Fourth, there is no threat of substitution because there is no known substitute for rubber gloves. Fifth, in terms of competitive rivalry, the top 4 players dominated the subsector as they cater for 80% of the demand of export market.
Next, we study the impact of the depreciating ringgit. The ringgit has fallen from 3.6 ringgit per USD in January 2015 to 4.3 ringgit per USD in September. This marks a 17-year low which has breached the psychological barrier of 4 ringgit per USD since 1998 Asian financial crisis. The depreciating ringgit may spur export demand, but at the same time increase production costs. Overall, the depreciating ringgit is likely to be a good news for glove makers because their revenue are mainly USD denominated and export-led, while their costs are mainly in ringgit. Export has been representative of the subsector's revenue, as the top players export to more than 200 countries, taking up at least 96% of their revenue. The high portion of the trade receivables in USD, up to 95%, indicates that high sales abroad, especially to the region of North America. It also improves the profitability of the sector through exponential sales growth. Latex, whom saw its average selling price falling 4.4% in its final quarter, but there was still 3% gain in profit once it was translated into ringgit. However, the gains may not be as high as customers will demand discount when competition heats up. Rising costs could be slight mitigation as well, as some of the nitrile raw materials and machines are bought in USD. However, the low exposure of trade payables and loans in USD suggested minimal impact of that inflation. The currency risk sensitivity analysis looks at the exposure of the financial position held in USD for the companies and shows the effect when USD strengthens. For 5% strengthening against USD, it is estimated for the most companies to have improvement in terms of profit after tax, in which Kosan gained the most, while only Top Glove suffers a loss of 4.8%. Well, this is due to the lowest percentage exposure of trade payables and loan in USD for Kosan compared to the others. As for Top Glove, the unhealthy projected loss is due to the huge net unhedged liabilities in USD. Nonetheless, the 142 million ringgit revolving credit may be repaid earlier before the ringgit slides.
In short, the overall net impact of weakening of ringgit has been favorable to the sector due to the increased export performances as well as the minimum impact to the costing. Analysts estimate that industry earnings rise around 3% for every 1% rise in the US dollar against the ringgit. The rosy outlook has been proven by 15% on quarter increase. For the future outlook of ringgit, the data from IMF suggested a further decline to 4.5 ringgit is possible in 3 months. So, we have talked about the impact of ringgit depreciation. We now like to discuss the potential impact of commodity price decline. The manufacture of rubber glove uses various key inputs such as latex, crude oil, and chemicals. The latex price and crude oil price had been falling throughout the year 2015, which helped in cutting the production costs. Natural rubber latex price had generally trended lower for years since 2012, hitting the level of 400 cents kilogram for September 2015. On the production side, we look at the cost breakdown for the glove manufacturing process. The cost structure for glove manufacturers are similar, in which latex price takes up nearly 50% of production costs. A 10% decrease in latex price will bring increase in gross profit for the companies, in which Kosan save up the most.
Thus, latex price is a prominent factor affecting the overall production cost, while the adaptation to it is dependent on the profit margin and production efficiency of the company. Latex supply has been on the rise as a result of the expansion of rubber plantation acreage across the region. Hence, we anticipate the latex price will continue to be depressed for the coming quarter. Owing to the strengthening of USD and raw material prices, the result of second quarter of 2015 have shown significant improvement for all 4 companies. For revenue growth, Kosan outshined its peers, hitting a revenue growth of 31.1%, attributed to 37% higher sales volume and transition towards a more nitrile glove intensive production mix. In terms of profit before tax growth, Top Glove tops it at 44.5%, mainly due to superior operational efficiency and quality enhancement initiative. Besides, Top Glove aces in improving the gross profit margin by about 2.5% on the quarterly basis. As for Hatalega and Supermax, which had meager revenue growth, are also overshadowed by its peers in terms of shrinking gross profit margin. Judging the quarter-to-quarter improvement from the impact of currency depreciation, Kosan benefit the most among its peers with its healthier exposure and better sales growth. As for the lower commodity price, Top Glove is able to capitalize its operational strength in squeezing the better margin compared to its peers.
The rubber glove sector has proven to be one of the most resilient sectors in the face of domestic and global economic challenges based on the latest quarter results, outshining other sectors with lackluster results. With the external factors continue to be favorable, in line with the expansion plans to absorb the rising global demand estimated at 5% per annum, the companies are expected to extend the profit growth in the upcoming quarter. Ladies and gentlemen, we have looked at the potential opportunities in the rubber glove sector, arising from the depreciating ringgit and the declining commodity price. We tabulate our key assumptions and the potential outcome in the table, for which we believe that Top Glove is likely to be the top gainer in the upcoming quarter.